people are investing for the first time, maybe there's agony of choice because there's 6,000 funds you can invest in and an unlimited number of listed securities.
What are you finding that's effective in helping your commercial teams?
Actually, the fact we're just becoming a bit of a bigger business, a bit more longevity and a bit more substance has definitely been a big help. I'm not sure they can all see the path to making a change. And part of that is, for us, is let's put a few cases out there where we did this, we built this, it took very little time. They were able to migrate from the old one to the new one over this period of time. It was not painful, or at least it wasn't unduly painful.
An unhappy customer in the marketplace adds a huge drag factor, and the opposite is true. If you're delivering what you say you'll deliver, they will be your biggest champions.
Yeah. The best content out there actually is our clients' content. If our clients are talking about how great their business is.
From a marketing standpoint, what are you investing in? We live in the attention economy. What's your marketing strategy?
It's probably a part of the business that you could probably grow at some point. We all live in different places, right?
You've just gone on the 170 people now. You've gone from the 100 people and you're heading towards 200 people. If you could share one lesson from that journey with a CEO that helped them along the way, what would it be? Hey everyone, I'm back in the studio for my next guest. So today I've got David Ferguson, the CEO of SECCL. I invited David today for a couple of reasons. SECCL is part of the Octopus group of company, which, if you're not familiar with them, do a little bit more than just your electricity. And his background is really interesting as well. So, David, thank you very much for making time so early in January for me.
Thank you for having me, James. It's great to be here. And this is my first real work I've done this year, I think. So it's great to be here.
Real work.
Yeah.
For anyone that doesn't know SECCL, can you just tell us a little bit about the business?
Yes, sure. So what we do, the product we offer, is what we call an embedded investment platform. So that allows anyone really to run an investment platform, whether that's a sort of app-based fintech, a neobank, a traditional bank, all the way through to wealth management firms. So the idea really is that they can control all the user journeys, all the user proposition, the pricing, the investment choices, all that kind of stuff, the way they engage with the customer. And that will then all run on our back end, our infrastructure, which is an API first platform that allows them to, invest money, disinvest money, make payments, rebalance portfolios, all that kind of stuff. So we're also, in doing so, we're a regulated business. We're also an ISA provider and a pension provider. So it's interesting business, which has got the sort of, we like to have the kind of agility and mindset of a tech firm, but the substance of a regulated business, right? It was founded about 2016 by a guy called Dave Harvey, who basically felt the technology in the wealth space just wasn't really fit for purpose. He got going on a really, really bootstrap basis for I guess, I think it was about 3 years. And then you mentioned Octopus earlier. They acquired the business in 2019, having found an interesting angle in the space where they felt the user experience was forever being constrained by the back-end technology. And that was kind of the angle. And that's very similar to where David started from, that Octopus has started to look at the space as well. And they're kind of meeting of minds, I guess, and they acquired the business in 2019.
And the wealth space is really interesting. I mean, different parts of financial services and technology industries go through transformation, and it feels like there's a lot of stuff going on in the wealth space. The embedding of wealth products in banking journeys. You've seen Monzo launch things. Revolut have done it. Like, tell us what's going on in the industry.
I think if you go back long enough, this is a very still pretty traditional sector, and it tends to be the preserve of people with more money and more wealth, and it's been very face to face and very traditionally organized. And the tech has really probably aligned with that. It's been quite old school and quite expensive to maintain and implement, and hasn't really sat in the customer's hands, if that makes sense. And I think now it's possible with more modern tech to bring that to life a bit more. So you see all the companies you mentioned, and big asset management groups like Vanguard or whatever, doing DC propositions, which just wouldn't really have been possible, I don't think, 10 or 20 years ago. So you've got this kind of ability to do it now. And I think that we have an issue in the UK where people tend to save a lot of money in cash products and not invest in investment products where they should, over the long term, get a better return. So hopefully we're starting to see greater engagement through established, trusted brands who can start to kind of open up the market a little bit and bring more people into the space, because there's I forget the numbers now, but there's an enormous amount of money, for example, in cash ISAs, most of which people could probably do much better with if it was invested. And I suspect a lot of the banks you mentioned and other ones are looking at this saying, we've got this kind of huge wall of cash that we're looking after on behalf of these clients. Interest rates have obviously been pretty high the last little while. But as they start to come down, people might be interested in something a bit more long-term and maybe getting a better return over time. So I suspect that's one of the drivers. And then I think the tech that's come along, ourselves and others, is really an enabler for that, because it wasn't, you could have had that hypothesis previously when interest rates were where they were, but the actual tech wasn't, you couldn't do it. You still had to get a paper application form and go into the branch and all this crap. And that is the old way of working. And if you're a client of Revolut or Monzo, it's just unacceptable that you'd have to do that sort of thing, And so the technology has only probably quite recently developed to the point where you can deliver a user journey in the wealth space commensurate with what you'd expect, I've come to expect in the banking space.
And it's creating quite a lot of interesting trends. Like, I think it's disrupting the typical wealth manager model where they've sat around taking 2% year on year for doing not much. And now the costs are being driven down massively.
Absolutely. And I think it's just that the industry's come from a sort of commission-based model. Everything was based on kickbacks and hidden charges, all that sort of stuff. And I think if you do the kind of pretty fundamental, let's look at this industry on a first principles basis, you just wouldn't build it the way it is today. Yeah, I think I completely agree with you. So you're getting fee compression across the chain. I think if you start, as we certainly did, with a truly customer-led mindset, and you really want to think about how you also get into this interesting conversation between, well, does someone have an advisor or a wealth manager, or do they not? Or at what point do these things converge? Or when do I have an advisor for a while and then I don't? Or when do I not and then I do? And I might want to switch in and out. I might want to switch in and out of that at various points in time. And I don't think very many of the systems in the sector, or even the companies that are in the industry, have really thought that way very much. They tend to be an advised business or a non-advised business. And we believe strongly there's a convergence occurring there, which there'll be various handoffs have to happen perhaps, or there are some regulatory thresholds and conditions have to be met. But fundamentally, why would I necessarily want to stay on the same track for my entire life or the same channel? And I think, at the moment, if you want to switch between channels, you've probably got to switch your platform and switch your investments and go through a whole lot of hassle and cost and misery. Whereas now you can have an infrastructure which allows you to kind of probably the back end stays the same, but you can choose maybe where you take advice or you don't.
And the advisory thing, a lot of businesses are very afraid of that because of the implications from a compliance standpoint.
Yes.
But actually, as these things have gone into the digital experience, you're getting highly accessible, what you would call execution only relationships that are just simplified.
We power, amongst the firms you mentioned, we also power Chip's investment platform, for example, which is, and I think what people have realized as well, you don't have to provide enormous choice. You can provide something relatively straightforward that doesn't put people off as they go through these journeys. And it's certainly early, people are investing for the first time, maybe there's agony of choice because there's 6,000 funds you can invest in and an unlimited number of listed securities. If you can actually sort of curate a more manageable or navigatable universe of assets, it makes it easier, I think. And that's what we're seeing. You've seen it with, the Vanguard platform's been very popular here. Monzo, you mentioned earlier, Chip, whoever. So I think, whereas in the wealth management space, the cost and the infrastructure of that industry exists almost in the mystique of saying, well, there's a lot of complexity, let me help you, and maybe I can just be helped by not having as much choice, That's part of the answer. Yeah. Certainly for people with less complex affairs.
As you said, part of your journey, a big part, was the acquisition of Octopus. Now, I've got to ask, I'm a startup guy. I think you are probably from background. And you typically have startups that are really small and agile, and companies, when they get bigger, they get acquisitive.
Yeah.
Bureaucracy starts to choke that innovation. But Octopus is a really interesting business. I know it because I get my electricity from them. But actually, there's a ton more. Can you tell us about?
Yeah, it's an extraordinary business. I didn't know it terribly well actually until I sort of spoke to them about this role. But I obviously knew of them, but not intimately. It was set up about 25 years ago now, right? I think 25 years ago by Simon Rogers and two of his team, two of his colleagues. And they're just entrepreneurs. Big time. Simon to this day is hungry for the next thing. I think he turned 50 last year. He's super excited about new ideas. And he's just got that in his head is who he is. And he'll tell you the story sometime, I'm sure. And, when they started that business, they literally got the yellow pages out. They came out of Mercury Asset Management, the guys. They were fund managers, basically. And they came out of Mercury Asset Management and phoned up hundreds of people, until 80 people gave them enough seed capital to build their first fund. So he knows what it's like. He's done the hard yards, right? He's done that thing where there's nothing here, right? We're literally starting with a blank sheet. So he knows what that feels like. And I think he's, through his entire journey he's been on with that Octopus and the business has been on, he's never forgotten that. And I think as they've invested in businesses, he's seen in people and the founders or the businesses they've acquired, those type of characteristics, and they're the type of people I think he enjoys working with, and he wants to work with, and he thinks can create value and do the right thing. Because the other thing, which I think is unusual about Octopus, it's a very entrepreneurial business, so it's obviously a commercial organization, but it's also a B Corp. I think it's one of the top 10 B Corps in the world. So there's a massive belief in doing the right thing as well. So you've got this kind of really interesting thing, which is, I think, great as a brand characteristic into the market with. And, the financial service industry isn't stuffed full of B Corps, right? It's, for whatever reason. And then also just as a talent attraction tool. People want to work in companies they kind of believe are kind of behaving well in the world. So, SECCL got its accreditation last year as well. So I think Simon's got that thing where he's built something of great power, actually, with a very different style. So it's almost like a long-term private capital, which you don't get very many of those businesses. Private equity VC tends to be 3 to 5 year cycles, as you know. Institutions tend to be much longer term. Maybe public institutions are very long term, but they're very slow. Nothing ever happens. They kind of they worry about the next quarterly earnings cycle, and that's all that really matters. Where Simon's created a big business, obviously with as I'm sure Octopus Energy's been the jewel in the crown in terms of the investments they've made, and it's obviously the famous business in the group. But I think every single business they bought a business called Legacy last year, which was previously called Guardian Angel, which sort of tries to make handling death easier, and they've got a business called Amicable, a business called Octopus Money, does sort of money coaching for the mass market. So I think he's just still got this great hunger that he might have turned 50 last year, but he probably feels like he's 32 or something like that, I suppose. And he just has that. If you walked him with an idea to him, he would listen to you. And if he loved the idea, he'd back you. I think that's how he thinks.
I think there's a couple of things that are just wonderful about that. The first is the longevity with which they think, because you're right. Like, having seen the VC bubble that ended in 2021, I've seen short-termism just unwind in a really bad way. So it's great that Octopus hasn't had that. And also the interesting thing is that how diversified their interests are. Yeah. But the central theme seems to be the type of people that they get running it, which is almost a little bit Buffett-esque.
Yeah, it's interesting. I've actually never asked Simon where that, if that's a factor in it. But I actually do remember when I spoke to him about this role, we have chatted about a few things in my previous business. And he said words to the effect, it was nothing to do with what happened there or was achieved there. It was much more about how you went about it. Was what had made me a potential candidate to this role. Well, what it's like. Companies do win when they've got the right culture, when they've got the right people in them and leading them and organizing them and thinking about the problems. And the combination of having the right culture with long-term backing, I say, is very rare, and I think a really potent recipe, because even what we're doing is a pretty expensive endeavor. Octopus invests a lot of money in us, so it's not something that is going to pay off on a 3, 4, 5 year window. I think Simon's pretty publicly said this is a 20-year investment for them, not a short-term thing. And so to get the backing in that way from an organization you feel very aligned with on values, ambition, duration, I think is super rare. And Sally made it for me. I'm kind of very old in the business. I'm 55 now, but it's been by far the most exciting almost 3 years of my career, and long may that continue.
And you touched on something really interesting, which is culture. Because if you pick someone out of a crowd and say, design a process, it's a lot easier to do, but designing a culture is far more complex. What is the culture of SECCL, and how much of a proxy for Octopus is it? How much is you and how much is them?
Yeah, that's a great question. I would certainly say we'd be very aligned. We're given autonomy, if you like. So there isn't a group edict that companies must behave this way, which I think is good. But I think inevitably the people that lead the businesses with Octopus are drawn to that, so they kind of have a shared characteristics. I would say what we've tried to be is super. I've always believed really in aligning three things, right? One is the outcome for the customer, one is for the shareholder, and neither are possible without the right people and the right culture in the organization, right? So we're very customer centric. We think there's an enormous opportunity to disrupt this space. We think it's very badly served just now. So that's quite an easy thing to point at and say, let's build a product that does this better, right? We're going to have high standards, deliver a high quality product. We're going to be super responsive on our offline support around about that. So that feels quite easy. And I think then we're trying to make it a great place to work. And I think that means something, but not just because it's got like a ping pong table and, you know, loads of beanbags or whatever. It's a great place to work because it's fulfilling work and we're doing a good thing and we're hopefully going to change positively millions of people's lives. So it's not, yeah, I think it's very purpose led, if you like. So it's not, I don't believe in artificial cultures where you sort of, you know, you say, we're going to be like this and we're going to pay someone £500,000 to design a thing and some artifacts that go on the walls, right? It's in your behaviors, it's in, you know, the way I behave, the way the leadership team behaves. And it should hopefully feel like a very flat structure, a very, I hope there's a lot of humility in the business because we're not done yet. We'll never be finished, right? We're never going to get to the end of this. And yeah, we're going to make mistakes and we're going to screw some stuff up. But hopefully each day, or, you know, on a moving average basis, we're making things better and we're getting better at what we do. We're improving ourselves in doing so, and obviously, and then we're hopefully creating value for shareholders. So it's probably a very long-winded, rambling answer to your question, but I think it's how we think about it. It's not yeah, you certainly can't put a finger on it and say that's what it is, you know.
But you can say what it isn't, and I think you just did that, which is the huge corporation, and they get a McKinsey style organization to come in and do a culture exercise, and you get the values, and all of the employees look at the values and think, what company is that? Because it's certainly not this one, and it's hollow.
No, I think that's right, and it comes to it's been interesting as we've hired new people into the business, actually, because when I joined, I felt we were very, 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 very tech and a little bit lacking in domain. So we were kind of stronger in tech than we were in the domain and the regulated space. And we brought a whole bunch of people in relatively early on in my time, and we actually slightly overcorrected, and we went a bit too far towards the domain, I think, and maybe lost some of our agility through that. I think now we've kind of resettled a little bit on where we think it's right. And I think now the team would have a good sense of who's going to feel, if we met someone new, are they going to fit in here? You know, and I think it's probably taken us, I've been here, I guess, almost 3 years now, but it probably took us a couple of years to really identify that, and also that we're building a business, hopefully a very big, successful business, not a business for the next 2 or 3 years, we're building one for the next 20. So how do we get young people into the business and give them the right support and the right sort of scaffolding around about them to make their careers amazing here? And in the end, if they do well here, we can remain the right employer for them, then we'll have a brilliant business. You know, it's as simple as that, really, you know. And we can't be tested on that yet because the company's too young to, you know, our average duration is too short. But if we're sitting here in, you know, in 10 years' time, and, you know, half of the amazing people who run the business just now in the more junior positions maybe are still with us, that'd be great, I think, you know, and a sign. And if we're still growing it, doubling the business every year, that'd be super cool.
It's interesting, though, from a sales and marketing perspective, a lot of the time those aspired values can be uncomfortable because they come into conflict with things that you do. Like, let me give a couple of examples.
Yeah.
We know historically that we want to create frictionless customer journeys, but we get content to capture the email. Or we want to provide a great developer experience, but we're too scared to share our APIs or something like that. So, you know, it takes commitment. Yeah.
And actually, we are super, the word I didn't use actually on the culture is about being open. And I think we are. I mean, our API docs on our website, for example, to use your example. And I think if people want to come in and talk to us about a role or what it might be like here, we'll tell you, and we'll say it's not for everybody, right? We turn down certain clients because we don't think they're trying to do a good thing for the customer. We obviously not everyone successfully wants to come for a job here, and some people just don't fit, you know. And we went through a spell, I'm not sure we were being open enough, and when people were leaving, they'd sort of just leave and they didn't get discussed, right? And there became a bit of grumbling about that. A lot of people seem to be moving on in a sort of cloak of, you know, kind of lack of transparency. And now we just get much more open about it, saying, well, we've got this concept of a regretted leaver, and some people are and some people aren't. And, you know, some great people leave our business, right? Because they other opportunities, are moving abroad, they clash with someone else who's great in the business. There could be lots of reasons why this happens. And we're just trying to be really super open about it, to be honest, James. And it's, you know, hopefully most people at least value the transparency, right? They might not like every single decision we make or every single thing we do or don't do as a business, but at least they can see we've rationalized it, or it's been rationalized around a table somewhere, and then, you know, they'll choose to back it or not. You know?
I believe people respect that authenticity. In fact, one of my earlier guests, Christian Nempwich, was talking about exactly that, and they were sharing the cash flow of the business, even when they had something like 40 days worth of runway left, because they believed that people would detect it anyway and they would respect the transparency. So
we're super flat. I mean, everybody in the team's like available all the time, and if somebody wants to, I'd hate to think someone could ask an awkward question that they'd be like, oh, should I share this? No, obviously some contractual things are confidential, and there's certain things you can't shout from the rooftops about. But in general, it's like, well, the person who joined yesterday should feel as in the most junior role, maybe should feel as able as anyone else to raise one of our values actually take ownership. If you see something that's not working, fucking fix it. Like, if you don't like the way your career's going, speak up, right? We're all adults. There's no children in this company. Everyone's literally grown up. If you don't like the way your people leaders managing your career or helping you develop, talk about it. Like, speak to them now. If they don't respond, they come and speak to me. There's a whole bunch of stuff like that. This is all just a bunch of adults trying to do something amazing together, right? And they're going to have times it doesn't work perfectly. That's just life. But, like any relationship or working relationships, just be super open and honest with each other, I think. And I don't think it's a terribly complex concept, to be honest, because they're all normal people, right? We all fuck things up.
The difference between simple and easy.
Well, maybe.
It's definitely simple. It's not always easy.
I always say we're all weird, in our own ways. And that's the richness of life,
Yeah. Talking about sales and marketing. So we're in 2025, buyer behaviors change.
Yes.
What are you finding that's effective in helping your commercial teams engage with the market?
So I think for us, actually, the fact we're just becoming a bit of a bigger business, a bit more longevity and a bit more substance has definitely been a big help, right? Because I think certainly when I joined, we were a really small business in the market, didn't have much presence. And I think, probably pretty classically, having satisfied customers, frankly, is the biggest thing. So we'll always point to either referrals or references, when people come to ask. So that's a big thing, what we put on the table. And again, we really encourage people to be straightforward. It's not like, come and tell the world about this and we'll put you in a studio like this and make it nicely polished. It's like, say it like it is, right? If there's stuff that isn't fully mature here yet, or stuff you don't like yet, or stuff that we're working on, I don't have any issue putting that in the market. So it's back to that authenticity. I think one of the on the other side, the thing we find sometimes the hardest is the buying cycle can be quite long, or even just be uncertain. It's like, well, we know we should be doing something, but we haven't yet begun to think about what we should do or the program of activities we're going to go through to make a change. And I think, a lot of people just now, wealth managers, banks, whoever, all the companies we talked about earlier, I think a lot are deeply dissatisfied with how their business is operating and how their infrastructure on this space is working, and perhaps elsewhere. I'm not sure they can all see the path to making a change. And part of that is, for us, is, right, let's put a few cases out there where we did this, we built this, it took very little time. They were able to migrate from the old one to the new one over this period of time. It was not painful, or at least it wasn't unduly painful. And it didn't take 5 years. It didn't cost £100 million. And it's just trying to get these evidence points, because our market is probably stuffed full of broken promises, which people have been fired for and had their careers limited by all the stuff that goes on.
I think we all know who you're talking about.
I'm talking to lots of people. There's a lot of organizations have just created expectations that they can't fulfill, or perhaps the client firm can't help them fulfill. It's not always on the vendor side either. Sometimes the client firm has created a vision in their head and they've somehow managed to choose the wrong vendor, or they've chosen a vendor which can't maybe quite cover all the ground, or they can't do their bit on their side quickly enough to join all the dots. So I think it's getting it all out and saying, well, we got a big pitch on Thursday this week, I think it is, and it's been amazing actually, because the potential client has been incredibly open with us on where they're at. They've given us a whole, this is the reality of our life today, where can you help? And that's going to be a much more productive conversation, whether we win it or not, but we're going to have a much better dialogue with them because they've been super transparent on the way. And I think the more we can get into that sort of situation, the better.
You've highlighted just a couple of really interesting things there, which is, the first is the power of customer advocacy.
Yeah.
A lot of the time I talk to clients about content or performance marketing or outbound sales strategies, and they're all valid.
Yeah.
But actually, an unhappy customer in the marketplace adds a huge drag factor, and the opposite is true.
Yeah.
If you're delivering what you say you'll deliver, they will be your biggest champions, and everything becomes 10 times easier. And the other thing is patience. You talked about the
Yeah.
length of the sales
Yeah.
cycles, but we do live in a world of in-year targets. It's
Yeah.
January the 7th, and we've decided what we've got to do by 31st of December.
Yeah.
But the reality is, the kind of technology that we're talking about
Yeah.
isn't an in-year decision.
Yeah.
Someone doesn't wake up, discover that they've got a few 100,000 or a few million down the back of the sofa cushions and do a wealth transformation.
No, that's right.
It's something that happens in the making across fiscal cycles, doesn't it?
Yeah, big time. And there's actually there's a firm we're hopefully going to win in 1 year. I don't know, maybe not this year. Who I've been in dialogue with, I think, for 6 years now, genuinely. And it's, if we win, it'd be amazing. But you're absolutely right. And that there can be a million reasons for that as well. It's not because your product's not good. It's not because it's not better than the one they've got just now. It's not because it's not better priced or better supported. It's just because for them, they've got other stuff on and all that. And even the content point's interesting because, again, we, as a kind of back end, we think of SECCL kind of to wealth management, what Stripe is to payments. So we're kind of sitting in the background. We're not, not a public facing brand. We would sort of think, well, the best content out there actually is our clients' content. If our clients are talking about how great their business is, and one of the reasons it's great is because SECCL made that happen or played a role in making that happen, then I think that's really powerful. So it's a combination of advocacy through their content as well. So we're really big on the, how do we cultivate a community? Is a bit of an overused word sometimes, but how do we cultivate this community of users who are sort of, believe in what we're doing, and hopefully people can identify that all these firms seem to do really well. A lot of them are operating on SECCL. Why is that? And then maybe we are the golden thread that runs through some of the winners. And then I think that feels like a really powerful, kind of springboard.
So in terms of the composition of your commercial teams, you're 170 people.
Yeah.
How many people have you got across sales and marketing? What does that look like?
Sales and marketing team is probably, if I include sort of onboarding and launch and then account management, which is sort of post-sales, that will be about 20-ish, something, a number of that order, which will be 5 or 6 in what you'd call marketing, I suppose, content and all that sort of stuff, and brand and things. And the rest will be either in the market trying to generate leads or just sniffing around as you do, or being around the place, and I include myself in that. And then we've got a team that goes through to supporting, for an RFPs and pitch process and all that sort of stuff as a kind of area that deals with all that stuff. And the other thing, it can be quite technical as well because we're doing regulated stuff. So it's a combination of complex technology, sometimes depending on what else it's plumbing into. And then on regulated stuff around about, client money, information security, financial crime, operational resilience, that sort of stuff. So there's a kind of body of work there that gets packaged up for any given individual purpose. And then we've got, I think, about 5 people doing account management. So sorry, a team that does launch work. So they'll get a team sort of through the program to launch. And then it moves into account management after that, which is much more, right, well, where's this heading next? How should we do more together? What are your growth plans, etc. I think we spent the vast majority of the company is product and engineering, and I suspect we'll probably move as we move increasingly into growth mode. That's the team that's probably going to grow the most, I would imagine, as we kind of see new sub segments of the market and such like to open up.
You talked about what are essentially subject matter experts, and they're a massive part of enterprise sales, aren't they? Because it's not a guy with a product that's ready to go. You've got invasive implementations that span probably 6 to 18 months. So there's a lot of expertise that sits behind that in the compliance domain, the functionality.
Yeah, I mean, it's funny. Our product can actually be live in tomorrow. I mean, we've done one in, I think, 6 weeks before, so that can be done. But you're right. Depending on who the buyer is, their sort of procurement team or process can be very burdensome. For perfectly good reason. You might find. I mean, our chief risk officer will find herself in every pitch. At some point in the journey, going through, where we are on some of these things to validate what the sales function has kind of claimed to be true. And we've definitely found ourselves sometimes. We lost one actually, I think a few months ago, and we just felt we were too honest. But we're like, well, we'd rather do that than, maybe we'll get it back next time. Maybe it'll come around sometime in the future. And we've had a couple of them have happened as well. So, it's we'd rather do that. It's back to that authenticity point, really. I think where you don't want to get into this. Well, if I tell a lie in the sales process, well, I'm going to unwind it at some point, right? And everyone probably sells a month or two ahead of the reality sometimes, because you're building it, it's going to be there by the time they get live. But if you start selling months and months and months and years ahead of the reality, you're in a very dangerous position, and just doesn't work. I couldn't be bothered trying to juggle the untruths.
No,
how do you
but it's really difficult. I was talking about exactly this issue with another founder the other day who also felt that he'd been judged when he felt like he was the only one in the room being honest in terms of setting expectations. And they were clear they have never missed a commitment that they've made. Yeah. But they were the only one in the industry. Everyone else is saying, "Yeah, you can have it tomorrow," but never delivering on it. And it's difficult, but I think it's the simple and easy thing, isn't it? Again, you if you hold true to your morals.
It comes to the octopus thing and the long term thing as well, right? Because we would rather build, if you like, a reputation or a group of, let's say for now, 20 firms that love us, that use us, that think we've done a great job for them, and even when things are going wrong, we put it right quickly, and et cetera, et cetera. We'd rather do that and go at a slightly steadier pace now than sign up the next 10 firms on a promise that we know we're really going to struggle to live up to, and then end up with 30 firms signed up, for which 10 kind of a bit pissed off. In fact, probably then some of the 20 are as well, because we've kind of tried to run over there and we've let some of these ones down. You end up with this horrible thing. So I think it's back to that point about the long term and trying to do something over 10 or 20 years rather than do over 2 or 3, because it does, you don't want to burn through obviously enormous amounts of cash and crazy amounts of cash, but you do want to build something that's got substance. And I don't want to, hopefully I'll still be running this business in 10 years time. I don't want to look back and go, geez, we just made such a mistake when we started bullshitting people in 2025. That's been terrible, because then it'll take 3 years out of your growth. If you just push everything out, right?
You want your brand to be, they are the people that deliver when they say they will.
Yeah, exactly. Yeah. And
because brand isn't typefaces and logos. Exactly. It's your cumulative reputation in the market.
Completely. Yeah. And there'll definitely be things that we get wrong or don't deliver on time, but we'll keep people informed, where we are at each point in time. And I think it's just an honesty thing, to be honest. And hopefully is a recognized characteristic of who we are.
So from a marketing standpoint, what are you investing in? We live in the attention economy.
Yeah.
What's your marketing strategy?
It's funny. We do quite a lot of content, and it's probably a part of the business that I say could probably grow at some point. Tends to be, we have this really interesting thing where we're serving a very broad, or sort of targeting a very broad number of subsegments, firms who all live in different places, right? So whether you're targeting, kind of neobank or a wealth management business, they just don't hang about in the same place. You're trying to get into the market. Quite a lot of our sales will involve or be through or associated with a consultancy firm. So we know them quite well, whether they be the kind of big four or some of the more specialist firms in the space. So we're trying to build those relationships. I think of all the ones we've won or got close to winning, they've kind of just heard about us somewhere, and there's it's not like there's hundreds of people doing this, so if you are going to look at this part of your business, you really should come across SECCL as part of that exploration, right? Now, where it's different is where we're trying to disturb someone who hasn't thought about it yet, right? And at the moment, that's tended to be more, we just know the firm or someone knows the firm. While being ancient has its downsides, one of the upsides is, you're pretty well connected in the market, right? And you sort of 1 degree of separation away from everybody, probably. So we've got a lot of hopefully friends in the market as well. So even if they hear of something going on, you should speak to these guys. So there's probably quite a broad network of people who would they're not commercially associated with us, but they would help our kind of awareness of what we do.
There's an interesting thing you touched on there, which is understanding where your business comes from, and I suppose an issue is attribution.
Yeah.
So for example, if you've probably, because every single company does, pays for the term SECCL, it's a branded search. Yeah. So Google gets the attribution for that. But realistically, it could easily be, someone in 2 years from now heard you on a podcast talking about the business, or they picked up a white paper.
Exactly. It's very hard. I'm never quite sure how to, it comes to incentive arrangements and all that sort of stuff. Obviously, it's really hard to be overly precise about these things. I think in this sort of space, we've got an amazing head of growth who does a great job for us, and she makes sure we're all doing what we're supposed to be doing, and making sure we're all super organized and chasing everything down. But I mean, we get, we probably every day get, 6 inbound inquiries on our website.
That's amazing.
Yes, and that's just like, and some, sorry, I say inquiries. people downloading things that might be might be looking from a competitive point of view, but some will obviously be inquiries as well. So we follow them up immediately where we think they're interesting. So there's different facets to it, but yeah, as you alluded to earlier, in a kind of B2B sort of enterprise style sales thing, you're not going to win it just because you've got a cool website, right? Or because like the first connection was really strong. They're probably still going to go into some sort of, if not an RFP, at least some kind of process where they're kind of looking at you a bit more deeply. So, I mean, the ones we've won super quickly, they were sort of, they had an existing vendor that was a bit distressed and they were really frustrated with, and they really wanted to get off it very quickly. So there was a sort of, they were in a hurry. I think it's happened 3 times now. They were super quick and we got them all live, each of them live within, I say each within maybe 8-10 weeks, something like that. But they were hugely motivated to do it. I suspect actually they probably cut corners on their own diligence on us because they just were so concerned about where they were at the previous time. Whereas more commonly, they're not they're in an unsatisfactory situation, but not a distress situation. And it's like, we've got to do something about this. Mm-hmm. So we're going to give ourselves a bit of time to do it. And that obviously then takes a bit longer. It's a more complex decision-making process with more people involved, as you've touched on earlier.
That's something that I don't think gets talked about enough. People's customers' motivation for changing, because I think a lot of salespeople are falsely trained to believe that if they're compelling enough, they'll can get anyone to change.
Yeah.
And the reality is, certainly with the kind of technology that we're talking about, things tend to need to be a little bit broken before people want to undergo change.
The one thing that's great here, so in the banks and stuff, in the non-advised channel, it's actually slightly easier because the value of the digital engagement is well understood, right? And that's been there kind of forever. What's interesting in the wealth management space, and I think it's perhaps a COVID related thing, is if we'd had this conversation 6 years ago, right? So in whatever 2019, we would have been it's highly unlikely a wealth manager would talk about their technology. It was a back office thing. No one sees it. It's not on your phone. It doesn't appear. You get a valuation statement once a quarter, and you get a bunch of crap about how things have gone or not gone, right? But there was the technology was never visible to the client, right? And I think now, if you no matter who you're a client of, if you've got a highly trusted personal relationship even with a wealth manager, and then you go and sign up for open an ISA, and it feels dreadful because you've got to get a form and download it and print it off and scan it and all that junk. I think that undermines trust now, right? So it's not a distress thing, but I think if I were running a more traditional wealth management business today, I'd be deeply worried about the impression I'm creating by having crap technology at the back, right? Whereas in the past, it was much more about, well, come and have some lunch and we'll chat about your portfolio, and you're more interested in whether the scallops were nice or whatever it was, Whereas I think now that's moved, we're well past that point now. And I think if you're relying on that part of it to hold you true, I think you're a real problem.
No, I think at a macro level, the importance of technology and scaling is now understood institutionally.
Yeah. And we also see as well in our business where, we tend not to be the only technology that's running this. So someone will have an app or a front end, stuff on the front of the API. And again, the efficiencies we think a firm can get out of this by having properly integrated technology is just enormous. And you can take enormous amount out of the customer cost, or you can take something out of the customer cost to make a bigger profit, whatever you want to carve it up. But there's just a huge, you mentioned the 2% number earlier. There's just a kind of overweight value chain in the round here, which may be better through technology, and we want to play a big role in that.
So David, my final question, you've just gone on the 170 people now, you've just gone from the 100 people and you're heading towards 200 people. If you could share one lesson from that journey with a CEO to help them along the way, what would it be? I'm
a great believer in if you always just focus on the customer. It's super boring, right? It's a super unspectacular answer, and recognize the only people that are ever going to make it happen are the people in the organization. It's not a complex, sophisticated answer, but it's back to your simple, easy thing, and just tell the truth, and doing that. So good for you.
David, thank you very much.
No, thanks, James.